Welcome to DeepTech315. Our three topics this week are earnings focused, that being Tesla, Meta, and then we're going to group one topic as Google and Microsoft. So, taking us through a big tech earnings week and kicking it off as a reminder, feels like a lifetime ago, Tesla reported, but they missed revenue and earnings off of lowered expectations. So, analysts had been lowering their expectations going into the quarter. Everybody was, and that we jokingly use the term everyone. I think in this case, everyone was under the table waiting for the ceiling to
Fair
fall
use.
down. Ceiling fell down, but stock popped up, and it went up based on, of course, Elon mentioning in the shareholder letter that they are going to be moving forward the time of their next generation vehicle. They had been talking about this starting production in late 25. Elon said it could be early 25 or even late 24. I'll take the over on that over under. And either way, they're pushing forward on this next gen platform. It did beg the question of, is this the Model 2? Is this the robo taxi? And just some further context is that they emphasized this concept that they are going to be leveraging their existing production capacity to do this. They don't need to build Giga Mexico. And so putting it all together, if you would have given me that press release, I would have said down 10%. I think it just speaks to the enthusiasm that the Tesla believers have that, in fact, this will reaccelerate revenue growth next year.
It's paid to be a contrarian, I think, throughout this earnings period. I mean, like you said, everybody kind of hated Tesla going in, stock rips. I think everybody mostly probably loved Meta coming in, stock tanks. And then we have Google, we'll talk about more in a minute. I felt like that was more mixed coming in. Stock is doing well. So it's one of those interesting reminders, I think important reminders that the setup matters a lot when you're talking about going in earnings. Setting aside earnings, I think the question is, what did we learn here from Tesla that we didn't already know? It doesn't feel like we learned a ton, right? Like we already kind of knew. Elon's talked about robotaxi. We have an event he's kind of flagged later this year around that, and then this next gen platform. He kind of said this report was not true. I'm curious inside the company if they were expecting to see a timeline like that laid out. So, like you
I
said,
could
I'd
see
take the
that.
over the timeline
Yeah,
too. But
being
yeah,
a surprise.
he's pushing the pedal like he always does.
For sure. The piece that I guess for me was I agree that the robotaxi, the Model 2, we don't know, didn't get a ton of detail on that. He did say to a question about to give some more detail about what this car is all about. He said we'll have more details. What's going to let me take a step back. When you got a question about the robotaxi and some more detail around that, he said you'll have to wait till August 8th to hear more about that. I'm not positioning that as well. I need to go back and look at the transcript, but basically there was a question that if you read between the lines that he would have suggested that they were in fact going to do the robotaxi. I think it's actually going to be the robotaxi. That's I'm out of consensus on that. I think they will show robotaxi or this production opportunity late 24, early 25. I think it is related to robotaxi. The other piece I would flag that was viewed as a positive was related to delivery growth. I was pounding the table that they were going to lower guidance on the deliveries for the June quarter. If you went and did the math, it looked like they're going to be down 6% in the June quarter deliveries. And they said that deliveries for the full year were going to be up and that the June quarter was going to be better. And I think what that translates to is that deliveries probably for June are going to be down about 3% and deliveries for the full year up about 1%. That does imply a nice steady 15-20% clip in growth in those final two quarters sequentially. So it's a pretty high bar. I still think you should plan 2024 for overall deliveries to be down about 5%. I'm going to stand by that prediction. That's where they end up. Understand Elon's on a different page. I'll give you a final word on Tesla.
It's just in the doghouse. I think that's the reality of it. Even with that 10% move, I think there's still a lot of questions. We think about like the Mag 7. It feels like Tesla is the one that is a little bit on the outside right now. Is it still one of the 7? Is it just the Mag 6? And it feels like this August 8th event is important. I think they need to show something, not just another cool demo. I think they need to show that they've got a product that can really accelerate revenue, re-accelerate revenue, really,
Hmm.
and put them back into that conversation of being one of the best companies in the world, because they make the best electric car. I don't think there's any question about that. But are they as impactful as the Googles and the Apples and the Microsofts? I think time will tell.
Love it. Let's shift to Meta. Of course, that was the exact opposite reaction. Stock traded down, call it, it started out trading down 10%, and then Zuckerberg opens up the call and says we're going into a multi-year investment phase. Remind me of Amazon commentary, and then stock's down 17% on that. Kind of rallied throughout the next day. Ended up, let's call it down 10% ish. But the overall message was it wasn't enough. They actually guided for revenue for the June quarter to be down, to be 1% less than what analysts had expected. Still up mid 20% year over year, but down 1% less. And I think the whisper numbers were they're going to beat them, and so, or raise for June. And so, kind of the guide down was 5%, 7%, and then you have this capex commentary, of course, where they talked about that being up about 12% higher than what people thought. And I put those two together and thought, I think the stock should be down 5 or 10%. And then you go through the earnings call and he talks all about AI. And I'm thinking, I understand the stock's going to be down tomorrow, but the stock really should be up.
Yeah, I think universally, at least at Deepwater, where we own Meta in our flagship Titan strategy, we own it in our crossover public-private strategy. We're huge believers in the company, and I think we all felt down 20% aftermarket almost. It just felt crazy. It felt like a huge overreach. And ultimately, I think that turned out to be right today. It only ended down, I think, 10 or 11% last I saw. So, I think that it's one where, again, go back to expectations. I think expectations coming in, to your point, were maybe a little bit more optimistic, obviously, than what they gave. And then I think Zuckerberg's commentary on top of that very small miss that we're talking about, that kind of lit the fuel on the fire for investors, some investors at least, to just walk away and say, we don't want to play this game again. I think that's the wrong take. I think that they have proven and are proving, certainly over the last week or so, with this launch of Llama 3, which is, in my view, the most powerful open source model on the market, and the integration of Llama 3 into Meta AI, proving that it is that powerful model. I think that's a big statement from Meta. And I think that they are showing, and Zuckerberg talked about this, I don't think they're just trying to be the best open source model company in the world or some bit player. Like, they want to be the player in AI. And they've got a shot. They've got a lot of data, just like Google. They don't have as much distribution, but that's kind of a wild card if they really make a game of it.
Yeah, they've not Google, not the frequency of distribution that Google has, but 3.2 billion daily active users. They've got it's strong. And you've talked a lot in the past about agentic AI, the concept of an agent. Some people call this personalized AI. Zuckerberg ended the call giving a wonderful explanation of what agentic AI can be to Meta. And it reminded me of like a year and a half, 2 years ago, when he got asked the question about why should we be excited about the metaverse, and he gave a really it was a disappointing answer.
Terrible answer.
To say it nicely.
Terrible.
And this time he just nailed it, which I think kind of speaks to his conviction about the AI opportunity. And you've talked a lot about this concept of agent-based AI, and you just mentioned about the data piece, and that's a big deal. And I wonder, what's the give and take going to be related to privacy when it comes to consumers? Do you think once they see the value of this AI actually getting little things done for you, that people will say, I don't care about privacy, let's give it over to Meta and let's rock and roll?
I've always had a little bit of a contrarian view about privacy in the first place, which is, people, the way they act matters more than what they say. The way people act is they don't care about privacy already. And so I would argue the premise of that question, while a lot of people are going to ask it, is actually flawed. People already don't care about privacy. If you can prove to them that, forget about privacy for a minute, we're going to give you this service, this agentic AI that understands what you want, maybe has your credit card information, can handle tasks for you and save you time, that's just going to be another reason for people to not care about
Right.
privacy. So yeah, I mean, I think that is absolutely the future. I don't think, I'm going to say it and it's going to sound controversial. I don't think privacy matters at all in the context of where agentic AI goes. I think people are going to be very willing, because they've been willing in the past, to let big services, not just Meta, but Google, Apple, Microsoft, use your data to deliver these services, because I think they will have value for people.
Sounds like we're on the same page. Meta's in a good spot. I think that goes higher over the long term. And last, we'll wrap with kind of the combo punch of Google, Microsoft. I'll let you kick this one off. Any initial take?
Google deserves to be up 10+% in the aftermarket. It feels good in our world, because that's the other mega cap name that we
Yeah,
are owners of, and big owners of. So I'm glad we have that to offset Meta. Bottom line for them
that one's, by
is,
the way,
I
it's
mean,
been testing our patience. In fairness,
it
like
has
I'm
been,
glad we've hung in there, but it has tested us.
I think, testing a lot of investors' patience. And that, I think, is part of the reason for why the stock is up so
Right.
much in the aftermarket after this report. I mean, basically, they did the Meta report last quarter. They
Mm-hmm.
had great underlying fundamental business results. Search was incredible. They increased their buyback. They issued a dividend, which now seems to be the growing trend in Silicon Valley, pay dividends like old companies. Um, but they just showed that, for all of the negativity, for all the questioning that I think has happened over the past couple of months with Google, and rightfully so, are they moving fast enough? Is Gemini broken? It seemed like it was broken at one point. I think that they are kind of getting back in the good graces. They're starting to accelerate some of the product releases into the world on the AI side. And if they can keep up that momentum, I think that that would be a very good thing for the company, and then ultimately for the stock.
I'm in agreement there. We'll just quickly hit Microsoft. All that matters is Azure there. It, I think, proved itself out on the guidance piece. They have 4 segments. They guided 2 of the segments down 1% for the June quarter versus consensus, 2 down 1%. They guided the one of the segments up 1%, and then Azure, they just said it's going to grow 30 to 31%. It just grew 31% in the March quarter, and stock's up 4%. And the stock really didn't do anything throughout the earnings call related to guidance. It's rare for Microsoft. Usually it kind of jumps around. So it just kind of reminded me all roads lead back to Azure. They're gaining share. Google up 29, Azure's up 31. The piece that I took away from it was there's all this talk about when is the benefit of AI going to start? And I think you just take a big step back, is that NVIDIA, AMD, they're seeing it now because the infrastructure is being built. We're seeing it on the cloud spend side, and that's a form of infrastructure. It's just a function of time before the applications come.
It is my bet, and I think we've kind of been consistent about this in Deepwater, is at the earliest, I don't think you're going to see anything meaningful for any of these companies before the end of this year. And I think more likely it's into next year where you see application side revenues that kick in and actually are substantial or meaningful, and that you can specifically say, these are related to some new AI product. So investors who think that we're going to get that sooner, next quarter, the quarter after, I think they're still on the wrong timeline. We are still very much in phase 1 of what we see in these technological paradigm shifts. You build out the infrastructure, then you get your data set and ready to go to create great applications. And then ultimately you have that application adoption with killer use cases for those end users. Maybe, that's the agentic AIs that we start to see in a year or two. Maybe they end up being the ones that really start to spark some of this.
Right on. Can't wait. Can't wait for our next episode too. On behalf of Doug and Gene, bye for now.